Cathie Wood is one of the best known investors across Wall Street. Her entire thesis is to invest in disruptive companies, to look out 5 and 10 years, not worry about day-to-day price movements. She's been doing this for a very, very long time. And ARK Invest, her asset management firm, has grown in popularity, especially with the younger generation that tends to be much more sympathetic to many of the technology companies that have become so popular over the last couple of years. Cathie Wood was on national television just recently, and she talked about 2 specific things that I thought were interesting. The first is that she says that we're in a recession. And the second is that inflation has been much stickier, much more persistent than she previously thought. Here's exactly what Cathie was talking about in this clip.
When you think, though, about the last year and you think about your approach, what is the lesson in it?
We were wrong on one thing, and that was inflation being as sustained as it has been. Supply chain, I can't believe it's taken more than 2 years. And Russia's invasion of Ukraine, of course, we couldn't have seen that. But I think that it has set us up for deflation. We think we're in a recession, and we think a really big problem out there is inventories, the likes of the increase of which I've never seen this large in my career. And I've been around for 45 years. And we're talking about the best managed companies in the world. If you're talking about Walmart and Target, they know how to manage supply chain. So if they have problems, we think there are a lot more problems. And then the other thing that's going on is the consumer is railing against these price increases. Consumer sentiment is down to record low levels, below 0809, below 80 and 81. I had just started my career and inflation and interest rates were in the double digits, 15, 20%. And most interestingly, consumer sentiment in the highest income groups is lower than in the lowest income groups, and the latter group is being, tormented by food and energy prices, which are really a regressive tax increase here.
Now, one of the interesting critiques of Cathie and her strategy is if you think that we're in a recession and potentially going further and further down this economic downturn, why would you be buying innovation stocks or growth and technology companies? Well, the reason is because markets are forward-looking. Cathie isn't buying them because of the current situation. She's looking out 5 or 10 years, and she's saying, where will economic growth come from? Where will value accrue over the coming years? And technology and innovation is one of those areas. It's the most disruptive part of the entire stock market. And so ultimately, she's saying, regardless of where we are today, recession or good times, I want to invest in the things that over the coming years will end up accruing that value. That's one of the key attributes of great investors, is understanding that you're not actually buying assets based on the current environment. Instead, what you have to do is anticipate what's going to happen in the future. Humans are really bad at predicting the future, but trying to increase the probabilities of your bets ends up actually leading to more wins than losses. And so when you see an investor like Cathie Wood buying these disruptive technologies and these growth and tech stocks, don't ask yourself, why would you be buying some sort of growth and innovation when there's a recession and potential deflation? Instead, ask yourself, what does Cathie think is going to happen over the next 5 years? And likely, then all of a sudden, the investments that she's making today make a lot more sense. Markets are forward-looking, and so remember, buying assets today based on today's environment usually just means that you haven't thought about what's likely to happen over the coming years.
Hey you, did you like this video? Great, we make 5 of them a day and post them here on this channel. Make sure you subscribe, like the video, and see you next time.